6th. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure here is basically the same, except I've got a very small WDC short on that I'm keeping. Very small WDC short that I'm keeping, and I got it from a good price too. All right, so let's talk about it. MSTR moving. Which way? Up, ripping up. Big move higher here in MSTR. Looks like a headline. Crypto's upticking a little bit. Bitcoin's upticking a little bit, but not enough to justify this MSTR move. So there's probably some news out in MSTR. Okay. Sorry, just give me a second here. Get the YouTube up on my other screen. Okay, cool. Let's talk about it. Pretty bullish day today, which is to be expected. SPY's up 0.6%. Qs are up a solid 0.9% and recaptured the key 620 level. The IWM had another big day, up 1.3%. So the first two trading sessions of the year, we saw this dispersion trade where it seemed like they were selling the winners of last year, selling a lot of the Mag 7 stocks, and really buying up the losers into the end of the last year. The meme stocks, you know, quantum names, all those types of stocks that we've been talking about. That's what it was like the last 2 days. So rotation. Today, it seemed like they kind of just bought up almost everything. You know, there were definitely some spots of relative weakness. Like, I don't think that NVIDIA and AMD traded well at all, especially considering what the semiconductor ETFs did today. And obviously, Tesla was probably the trade idea of the day from the morning, excuse me, from the morning meeting on the short side. So there was definitely, you know, some pockets of weakness out there, but overall, you know, the Nasdaq is up pretty big, the IWM is up pretty big. So overall, it does seem like they kind of, you know, bought everything today. So market is really strong, and that's exactly what we were expecting. I mean, I feel like I was screaming it from the rooftops. Like, everybody, the market is bullish, which isn't to say that you can't find spots for what we like to refer to as like cute counter trend trades. There was actually some pretty good opportunities for that. Believe it or not, I made money short Sandisk today, not swinging it, but made some money short Sandisk today, and we had some pretty good index level shorts, and obviously the Tesla short call out was really the trade of the day. But anyway, the market itself is just full on bullish. The VIX is down, the flow of funds is bullish, sorry, I'm being distracted by the chatter on this MSTR. MSTR is continuing. Yeah, MSCI not to exclude digital asset treasury companies from the indexes. So that's what's moving MSTR here. Anyway, lost my train of thought a little bit, but what I was just talking about, I believe, was the daily chart of the indexes here. So it's just full-on bullishness. The only slight question mark was with the Qs. If the Qs could recapture 620, and they did that. But starting with the SPYs, we discussed this morning that I love this pattern. This is a beautiful bull pattern when you've got like a bigger consolidation. So the SPYs have basically been in like a 3-month plus, maybe even 4-month consolidation at this point, where we've been roughly ranging between like 650 on the downside and like 690 on the upside. So you got this broad consolidation here in the SPYs that's lasting for multiple months after a really big expansionary move to the upside off of the April lows. And then within the confines of that, you have a tighter consolidation within the upper range of the broader consolidation. So when you get that tighter consolidation in the upper range of the broader consolidation, that can really be a pattern that I like a lot to set up for the breakout to the upside in the market. And it seems to be what happened today. It looks like we have a new all-time high close in the S&P. We broke out through 690. We broke out through all-time highs. And we're not extended either. We're not extended. So this market looks like it's set to continue. The IWM we had mentioned was already looking great once it's back above 250. I had another really big day today. The only thing you got to worry about with the IWM at a certain point soon, if it continues to maybe tomorrow, is that it might get too extended. And the bigger question mark was the Qs, because the Qs hadn't recaptured 620. 620 was really the level where I wanted to see the Qs get above to confirm their bullishness. And it had gotten brought up, I think, in the afternoon meeting yesterday and in the morning meeting this morning on the wedge here. So you've got this big bull wedge that's built out in the Qs, and this has broken out to the upside as far as I'm concerned above 620. Some technicians might really want to see a close above the December 26th high to confirm that. But as far as I'm concerned, getting above the high from 2 days ago and getting above 620 really begins to break this wedge out to the upside. So all three indexes look great. But what I want to circle back to is a lesson that we did in yesterday's afternoon meeting, which came from a question, I think it came from David, where the question yesterday was about something along the lines of, like, are there time frames where you look for reversals? And the answer to that question was no, but time frames matter, and understanding time frames can help you understand when there is a higher probability of the market retracing. And I'm a big believer in really never calling for reversals, or I would say extremely, extremely rarely calling for reversals, but primarily calling for retracements. And today was like really a perfect example of that. We called out this QQQ high here at 1025 and the break lower here at 1030 for a short, and that was a great intraday short. Obviously, the market eventually broke highs. So the idea here was, sure, you have a bull flag now on the 5-minute chart that's attempting to break out at 1020. But what I like to remind people about bull flags is that bull flags usually can't continue without the ADMA catching up to the base of the bull flag. And you might say, well, Derrick, look at the pattern here. The ADMA did catch up to the base of the bull flag. And if that's what you're saying, then you are correct. The ADMA caught up to the base of the bull flag on the 5-minute chart. A lot of times you'll hear me refer to bull flags not being able to continue when the ADMA on the 5 hasn't caught up, when it's like the very, very beginning of the day and there's a lot of upside extension and it's like prior to 10 a.m. But here you had this bull flag build out, the ADMA caught up, but what time of the day is it? It's 10:25. What matters more at this time of the day, what really begins to matter more, is the 15-minute chart. So it's not to say that this trade can't work. It's to say that this trade, this bull flag breakout trade on the 5-minute, has a much lower probability of success because it's now 1030 plus, and there's a lot of extension on the 15-minute chart. I'm not going to bother pulling up a 15-minute chart because we know the upper band of equilibrium on the 15-minute chart is the same as the 21 EMA on the 5. So you can see here the Qs are trying to break out at 1030, and the ADMA on the 15 is still sitting at like 620 spot 40. So what I actually called for when this thing was breaking up was actually a short. And I said at the time is that as soon as this came back down through like 622.30, is that this looks like it's going to be a false breakout to the upside that could actually lead to a 15-minute price correction to the downside. And then that's exactly what happened. So it was a really good short. I know a lot of people on the team took it. We pulled all the way down to, you know, the equilibrium zone on the 15-minute chart. Fine, I will pull up my 15 here really quickly. We pulled all the way down to this ADMA on the 15, and by the time we got to the ADMA on the 15 / the 21 EMA on the 5, this is where I was saying at this point, I was like, guys, if you took the short, you should probably have like at least 75% of the position covered. Because what is the probability that this retracement, I was never calling for a reversal, but sometimes retracements can become reversals. The question is, what is the probability that this retracement lower actually can become a reversal? And the answer to that is very low. Why is it very low? Because look at the daily chart. The daily chart, we just discussed it, is full on bullish and is not extended. For me to think that this retracement lower has a high probability of a reversal, or a, not even high, I'll say higher probability of reversal, I need to see one of two things. I either need to see a daily chart that's just bearish, which it's clearly not, in which case we're continuing, we were strong in the beginning of the day, but we're actually set up to continue a downtrend that's on the daily. Then this has a much higher probability of being a real reversal lower and making new lows and continuing down, or extreme upside extension at the index level. And we have neither of those things. Going back really quickly to the daily chart of the Qs, we just discussed the daily chart of the SPYs, Qs, IWM, all three of them are full on bullish now that the Qs are above 620, and we're not extended. If anything, this is a day one to the upside on the Qs. Qs are trading even right now at just under 624 with the ADMA at 619. We're very far away from this market being like extremely upside extended, where you can actually look for an upside reversal on a small time frame to satisfy the extension on the big time frame. I would need to be seeing the Qs trading today at like 635 for me to consider that this retracement on the small time frame has enough extension on the big time frame to actually become a reversal on the small time frame, if that makes sense. So I just thought that today's price action, especially because we talked about it in real time, was a great add-on to the question from David yesterday and the little lesson that we went over as a result of that question. So I just wanted to re-review that really quickly. But again, daily chart across the board is looking incredible. Trade of the day, though, even though the market looked so strong, was Tesla to the short side. Was really pounding the table on this one, both when I spoke on Benzinga at 8:30 this morning and when I did the morning meeting at 9 a.m. I had really strong conviction on this idea. First of all, you have a incredibly weak daily chart here. I would argue it's probably the worst of the Mag 7 stocks. Consistent relative weakness ever since it broke down on this bull pattern. Failed bull pattern comes a fast move. We had 1 day of relative strength yesterday, but then after hours last night and then again this morning, it was just like one piece of negative news after the next, and the market wasn't pricing it in pre-market. It really kind of waited for us to have you had all the time in the world actually to be able to short this pre-market, and even after the market opened, you had the inside and down pattern on a weak daily chart, which is multiple pieces of bad news. You had NVIDIA come out yesterday and said that they're working basically with Mercedes on their self-driving cars, so that's more competition in that space. You had Lisa Su at AMD, I believe, on stage with a robot similar to what Tesla's trying to build out. But guess what? It wasn't a Tesla robot. It was some other company. Guess what that means? What we already knew. Tesla's not going to be the only game in town when it comes to robots. Then this morning, you had the German car sale numbers come out for Tesla, and they were just abysmal. Down 48%, and that's in a market in Germany where overall electric vehicles are increasing, but Teslas, they're just not buying them, and the reason why I think is obvious. And then the UK also came out with bad numbers. So you really had like 4 pieces of bad news come out in Tesla between last night and this morning, as far as I was concerned, in combination with the inside and down pattern, a relatively weak chart, and a pretty broken chart. So that was just a phenomenal trade. So yeah, Tesla was a big focus. The market obviously was a big focus, like it is every day. And then the other thing that was just really wild about today was just the semiconductors, and we spent a lot of time focusing on the semiconductors. The craziest part about the strength in the SMH to me is SMH is up 2.6% on the day, maybe even a little bit more than that. The craziest part is that I'm looking at an SMH that's up 2.6%, or SOXL, which is the one I trade a lot, actually up 9%, but that's a 3x levered ETF, with NVIDIA actually down on the day. NVIDIA actually down 0.25% on the day. AMD actually down 1.3% on the day. AVGO basically closing flat on the day. Marvell down 2% on the day. I guess SMCI was up 1.5%. So it was incredible to see that SMH could be up that much when most of the major semiconductor names that we really focus on did not participate. So where did the strength come from? Well, One, it came from the semiconductor that everybody I feel like always forgets is a semiconductor, which is TXN. TXN had a huge day today, up 8%. And then it was the memory space. It was Micron, which I know for sure is a larger component on like SOXL, and I'm pretty sure at SMH. And I assume, but I haven't fact checked it myself, I assume that you also have maybe like SanDisk, WDC, STX, or some of them in those ETFs as well. And obviously, those names were just up massive today. They had a catalyst to the upside with news. You know, CES overall seems like it's kind of being a dud when it comes to like Nvidia and AMD, but we're just seeing more and more news and more analyst information that they just can't keep up with the demand in the memory space. And these things just absolutely ripped. So SanDisk at the end of the day up 28%. Holy cow. Look at this chart in SanDisk just going back from the beginning of September. I've almost never seen anything like this. Especially, this is not a meme stock, you know. This is not like QMMM, which is that still halted? It is still halted. Wow. You know, this is not like an insane BS low float meme stock. But these are real companies. SanDisk going from $50 or beneath it in the beginning of September, up 28% today, up to $351 here after hours as we're looking at it. Just I mean, really remarkable. WDC here also just a massive move, up 17% on the day. STX, which for my research is the worst company of the three, up 14.5%, and also just a major breakout here on the daily chart. Greg giving me the SMH top holdings. Nvidia is 17% and was red on the day, and SMH was still able to be up that much. It's incredible. But Micron's in there at 6.5% of the SMH. What did AMAT do today? Yeah, so it's just pretty incredible. Again, AMAT was up huge. Yeah, but it's still incredible that SMH was able to be up as much as it was with no participation from you know, the first semiconductors I always think of, which are basically NVIDIA, AMD, AVGO. So you know, that was definitely a focus, and it was difficult. We did nail this short here in this SOXL. Granted, I think that was my second or third attempt. You know, I think I might have called it out twice, and we had a couple failed trades, and then we called out this one here when this thing was really seeming to go parabolic. Gave an upside tail. It's 10 o'clock now. Again, understanding how extension works on multiple time frames. When you got this much extension, and granted this is a semiconductor ETF, not the indexes, so higher beta here, you want to keep that in mind. But now it's, you know, the 10 a.m. candle, and you still have this much extension on the ADMA on the 5. You're probably going to need at least a correction to that ADMA on the 5, if not more of a 15-minute time frame correction. And that is what happened, right? So we called out that short. It was a little bit disappointing that it was a bit more of like a time correction than a price correction, but it was still enough of a price correction to pay you if you had a good price. And then you pulled back even further on it, and you know, that was kind of the trade. And then similar to the NASDAQ short, which eventually made a new high, and if you kept 10 to 25% of your short on, you get stopped out of that at new highs. You know, same deal here with this SOXL. You cover more than you need to, you make money on the trade no matter what, and eventually in the last 30 minutes of the day, when a new high comes in, you get stopped out of the position, most likely. So yeah, I mean, that was the big focus today. It felt like a very busy day. Very busy day. And then at the same time, there actually was some weakness in some of the names, not all of them, that had recently been running. Like I know, like SJOBY tried to be weak a little bit after two really big days. Quad U at a certain point was trying to be weak after two really big days. But I don't think that these names are done. I just think that they got a little bit extended. Which also, by the way, we discussed this in the morning meeting as well. We don't chase day threes. If you know, we want to anticipate that these moves are going to occur, not react after they or are already happening, right? So if you're waiting for day three to try to buy any of these meme type stocks, they may have still worked for you, They may still give follow through over the course of this week, but it's a significantly more difficult entry with a significantly worse risk reward. So I think that kind of covers everything on my end that I thought was worth reviewing. I am happy to answer any questions that anybody may have. Ryan here giving an update on the way he has his wedge drawn on the cues, and the way he has it drawn, it hasn't broken above the line yet, the actual trend line. And that's important. For me, what I'm always looking at when I think about the definition of a wedge is the actual pivots. So I'm saying that the cues are breaking this wedge to the upside because I'm classifying the January 2nd high as a pivot. But like I said before, some technicians would say that you actually have to get above the December 26th high to really confirm that the QQQ wedge is breaking to the upside, which is still a little bit higher, still another $2 or so higher. So thank you for the update on the chart there, Ryan. What about Apple? Yeah, Apple continues to be weak on its daily chart. Incredible to see the strength in the Qs, considering Apple. But look at Amazon, which, by the way, we talked about Amazon in the morning meeting today and yesterday. As a long through 2:30, I think, yesterday, and as a long through 2:33 today. Great follow through in Amazon. I was slowly selling some all the way up. Google disappointed a little bit, was once again just kind of boring, didn't have anything going on. Microsoft improved, but is not out of the woods yet. Microsoft really has to get back above like 485 in order to start looking better. But Amazon's the one. Yeah, and the Apple short yesterday was a great call, whoever made that. I liked it through 270. I thought that was the real support level. But just definitely gave some real continuation today. From Tim, on your call out for Tesla, I was looking at the 448 level and had a good entry, but terrible execution. 448, okay. Let's see. Yeah, I mean 448 is going to be really tough to nab that. You'd be nailing the high to the penny there. Sorry, just looking at this with the pre-market chart. Yeah, so the 448, if you include the pre-market, which I was even calling for starting to short this a little bit in the pre-market, you could see it had some pre-market importance, that 448. And it was difficult to capture, and this goes back to a little bit of actually what we were saying yesterday about the best trades are sometimes the most difficult ones to capture. This one was pretty hard to capture if you weren't nailing this short within the first couple minutes here. You know, either like looking at that 448 like you're talking about, or shorting it through yesterday's low for the inside and down, which is 444.50. You had to either get one of those two prices or you had to have a pre-market. If you missed 444.50, this thing didn't really give you an opportunity to be able to get in until maybe here. But it's a tougher trade, I think. Shorting this bounce back into the 80 MA, especially at this time of the day, because guess what? You got 15-minute extension to the downside, and the market itself is also strong. Maybe you could have gotten some short here, but that's a tricky trade. The much better trade, and I want to say easier trade, but you had to just be fast and really have it on your radar right away, was shorting it off the open for the inside and down, or nibbling on some pre-market, or maybe you're shorting like kind of versus that 448 area right away when it opens. What else you guys got for me from Didi? Didi? What are we calling you? Didi like Puffy, or Didi like the Chinese Uber? How do you utilize the MA, the moving averages on your chart? Are you a day trader or a swing trader? Which makes you the most money? So I'm both. Would be the first thing that I would tell you. I both day trade and swing trade. So I assume you're new on the team if you're asking that question. So welcome. So I both day trade and I swing trade. A lot of what I do at this point is I take kind of bigger picture um, ideas and bigger picture positions, but I very, very actively day trade around that bigger picture core for cash flow on a day-to-day basis. Which makes me more money probably depends a little bit on the market environment, but generally the bigger picture trades make me more money. Um, when I started my career, not to go off on a long tangent, I'll keep it short. When I started my career as a professional prop trader at T3 in 2010, the group that I traded with really didn't allow for overnight positions when I first started. Everything was intraday, and you know things evolve. T3 has evolved massively over the course of the 15 years that I've been here in consistently positive ways. But first 3 years of my career, I don't know if I ever kept a position overnight. Um, Now I think that pure day trading is reward limiting, and my whole approach towards trading is to maximize reward. Right? I'm a big believer in trading from a win-win position and maximizing risk from a win-win position. And the way that, sorry, maximize reward from win-win position. And the way that you do that is, let's say you take a day trade and that day trade works for you really well and you're 3% in the money on 25% of your position at the close. And the daily chart looks great. The daily chart looks like it'll continue in the direction of the day trade that you put on. Do you close that position out into the close because you're a day trader and you don't keep positions overnight? That's reward limiting. From my experience, the big money comes from capturing big moves on big size. And at a certain point, that requires you to keep positions overnight. And in the example I just described, you put on a day trade, you close 3% in the money, you keep it overnight, and you're just doing it with a percentage of your position, maybe 25% of your position. What's the worst situation that could happen? The whole market is a big gap down tomorrow. Maybe your stock comes out with bad news and gaps down a couple percent tomorrow morning. The market gaps down, so your position gaps down, whatever. Well, all you're doing is you're giving back money that you've already made, but you have the potential to make more. And what I love in trading is risking the money that I've already made in order to make more. What I don't like in trading is risking money, to be honest. And it's a necessary part of what we do. You have to risk money um, as a trader in order to be able to make money. But the idea of putting a trade on, having that trade fail, and losing my own money, I don't like that idea. That idea sucks. So I try to do that conservatively, but risking the money that I've already made in order to make more on a position, trying to make my winner where I'm currently up 3x my risk into being up 30x or 300x my risk, that's the risk that I'm willing to take all day. I love risking the money that I've already made in order to make more. So at this point, I would say the bigger money I make comes from positions that are more than just intraday holds. Um, and at the same time, though, certain environments, certain trades, I'm not afraid to put on a cute day trade, which we call out all the time, like the QQQ short that I just went over. It's a great opportunity for a cute day trade. Or when I shorted Sandus today, I didn't think I was going to be, probably swinging that. Just meant it to be like a cute trade. It worked. I got out of the way, and then, continued to move up. So that answers one part of your question. The other part of your question was moving averages. So blue is the 80 EMA, red's the 21 EMA, yellow is the 200 day. The 8 and 21 EMA are really important to me. The 8 and 21 EMA, and I was just kind of going over this a little bit when we were looking at some of the charts. I consider the space between the 8 and 21 EMA to be what I call the equilibrium zone for any stock that I'm trading at. If a stock is trading at or between the 8 and 21 EMA, I consider that stock to be trading at equilibrium. If a stock, or in this case the SPYs, because I just have it up right now, is trading above that equilibrium zone, we say that that stock or that market is extended. Now, extension is a really important nuance and part of trading that you want to learn to understand, because it tells you when you should continue to push trades in the direction that they're moving, when you should be more conservative on booking profit, when it's kind of in like a no man's land where you should be doing nothing, or when it's become so extended that you can actually look for a mean reversion trade and go the other way on a directional movement. So that's why extension is important. So right now, the SPYs are trading at like 692 with the ADMA at 687. So I would say that you have $5 of upside extension in the SPYs. $5 of upside extension in the SPYs is kind of nothing at this point. If it were to go another $2 higher or so, $2-3 higher, I probably would begin to say that the SPYs are in what I would call no man's land, which once you're in no man's land, it's not a good risk reward to continue to buy, because so much of a movement has occurred already. The stock is starting to become extended. At some point, it's going to need to have a correction, but it's not extended enough where you can feel comfortable shorting, because it's moderately extended and it can certainly continue. If the SPYs were closing the day at like $702, so like $15 extended from the SPY, from the ADMA on the daily chart, then I'd be saying like, wow, we're so extended from equilibrium that I should really be looking to more aggressively book profit on my longs and potentially come in on the other side and look for shorts for mean reversion trades. So that's what I use the 8 and 21 EMA for. It's a gauge to understand equilibrium for the stock or the market that I'm looking at, and it's as simple as that. I do like having a 200-day simple moving average. I also, even though I don't have them on this chart, like a 20 and 50 simple moving average. So 20, 50, and 200 simple moving averages. But the purpose of that is very simply just to show you essence of trend. And I go over this in my training program classes somewhere. So if you have access to my training program classes, make sure you review all the information in there, because the training program classes are meant to be foundational for your trading, and then we want to build on that in our morning and afternoon meeting. But what matters to me is like the slope of those moving averages. So the 200-day is sloping higher. That means that the essence of trend on a large time frame, as represented by a 200 moving average, is up. And knowing that essence of trend is important when you're thinking about time frame continuity and trend continuity, which acts as a layer of probability in your trading. And layers of probability, that's a whole nother class in the training program. That's probably one of the most important classes that I have in that training program, and people want to make sure that they go over that. So hope that helps. You still haven't told me if you're Diddy like Puffy or if you're DD like the Chinese Uber for your name, but I want to make sure that I'm saying it right. From Kevin, what is a red dog reversal? Do you have any examples? Thanks. Sure. So red dog reversal or RDR, or sometimes you hear it referred to as like an Oldensmith overthrow, but it's kind of a half joke, or like a OOO or something like that, which is like a half joke, because the red dog reversal is a trade that already existed as what was called an 80-20 trade. DD like Dada. I'm not calling you Dada. Maybe, I will if that's your name, I guess. Now I'm completely confused. Anyway, no problem, by the way. What was I just talking about? Oh, red dog reversals. So the red dog reversal is also the same as an 80-20 trade. It's a trade that Scott Redler really likes, if anyone knows him. And, Scott is a great guy, has enough of an ego where he was willing to rename a trade that he likes after himself, and it's now become more commonly referred to as a red dog reversal. And then as a joke, some of the guys here on the team eventually were like, well, if Scott can name it after himself, we could name it after Derrick. And so every once in a while you hear somebody call it an Oldensmith overthrow as well, which is what you will sometimes hear in the VTF. But that's all the same thing. Like 5 different things is all the same thing. So that's just FYI in case you hear different things mentioned here there is the DOO in the VTF. So basically now to actually directly answer your question a little bit more, and I don't really have a great example off the top of my head, but I can type up some charts and see what we can find. It's like a counter trend retracement trade. Really, he shouldn't have called it a red dog reversal. He should have called it a red dog retracement, but red dog reversal sounds cool. Basically what it is it's when you get like a minimum of a day 3 on a move, and then you begin to look the other way. I don't know. Does anybody have any examples off the top of their head where I can type it up and show on the chart instead of me just trying to talk theory here? It would certainly make my life a little bit easier. Not in silver last week. I don't know. Just type up some names here. Did RGTI at the top give one? It's not a great example. QBTS at the top, also not a great example. Micron yesterday. Yeah, but that's technically not one because Micron was a day 2. It technically needs to at least be a day 3. But I can use this as an example, and you guys can just use your imagination a little bit. So, so you see the candle here from January 2nd. I want you to just assume, use your imagination for a second, and instead of the price action before January 2nd, just assume that December 31st was actually a very similar candle. So, let's just assume that December 31st, you had a big green candle here, and then the second day, so then this becomes the second day, January 2nd, where it, really continues. So that becomes your day 2. And then on day 3, which is yesterday, the stock trades back through the previous day's high. That can happen in one of 2 ways. Either it gaps above, like Micron did, and then trades below, or it doesn't gap above, but intraday it trades above and then comes back below. So the idea here is after a big multi-day move, at least 2 big days in a row. And again, my problem with Micron and why it's not an RDR yesterday is because it was only 1 day. You need to have at least 2 big days in a row, if not 3, if not 4, if not 5. And then on that next day, you are looking for the stock to trade back through the previous day's high. What that multi-day large up move is going to do is it's going to create a lot of extension from that equilibrium zone, like I was just discussing on Dada's question just a little bit ago. So you're coming in at that point after a multi-day move that's created extension, and you're looking for a rational way to be able to short it on the way down to take advantage of that extension, to look for a retracement back into the equilibrium zone. And the way that you execute that trade is by shorting through the previous day's high with a stop loss at the high of the day thus far. And then the risk reward is you're risking to the high of the day thus far. Your reward is going to be a move back down to that equilibrium zone, the space between the 8 and 21 EMA. So that's what the RDR is. MSTR, nah, it's a tough example because it's a tough example. IMNM, yeah, maybe this IMNM. I don't love this example either because there's not a lot of extension, but technically it is correct. You had 2 big down days in a row. I would like this first day to be bigger than this, but 2 big down days in a row. Day 3, it trades back through the previous day's high. So what you would look to do is, oh wow, it didn't do it till the afternoon. Oh, no, it did it here. You would be buying this thing. You actually would have gotten stopped out if you did it intraday. You'd be buying this thing like right here, back through the previous day's low with a stop loss at the low of the day. So you would actually would have gotten stopped out here. It wouldn't have worked. But that's the idea behind how the trade itself is supposed to work. I'm sure we'll find examples and we'll be talking about it. I don't do counter trend trades, but I use ATR bands. Makes sense, like a move extending far beyond at +3 ATR. Yeah, it's the same concept. I've actually always very much disliked using ATR, and I've never used it in my own trading, um, because uh, uh, because if I find that like the days where you really should be trading stocks, it should be trading outside of its ATR. And I've always felt that looking at ATR could be reward limiting because you're like, oh, this thing just moved a full ATR in my favor. I should be booking some profit. But if you're really trading an in-play name that's got a ton of volume, that's got some news or whatever, it could move, +3 ATR all in one trading session. That's the day that I actually want to be trading it. And therefore, I have always found that looking at ATR as a statistic messes me up because I'm looking to trade things on the days that are outliers. Because the outlier days are going to have more volatility, bigger movements, and therefore better risk reward. In order to see my classes, you either have to be a prop trader with T3 or you have to purchase them. So if you're a prop trader T3, you get access to it for free. If you are not, you have to purchase them. What else? Scrolling back up here in the VTF. From Tim Q. Just because it tested a few times after hours yesterday and PM today, I'm not sure what name we're talking about. Oh, you gave me a chart of Tesla. I nibbled some in the pre and sold it too early. I didn't leave any runners. Yeah, you want to make sure that you have a game plan in place that can maximize reward. That'd be the big thing that I would say. From Sam. Can you briefly go over pullback or bounce trades when extended above the 8 and 21 EMA? So sure, kind of think that we did already a little bit based on other questions. Going back to the market, I've had for some years now general rules on market extension for the SPYs and Qs versus the 8 EMA on the daily chart. I'm in the process of making adjustments on those numbers because these indexes have gotten so much more expensive. Traditionally, for the last several years, if the SPY was $5 extended from the 8 EMA or less, I considered that not actionable, and you would want to continue to trade in the direction of the trend. So like right now, the SPYs are, again, they're trading at 692 at the 8 EMA at 687. That's $5 of extension. That's negligible. And I would want to continue to be long this chart. And traditionally, between $5 and $10 of extension, so basically like starting at 392 and above, I would consider that to be what I call no man's land of extension. So no man's land is what it sounds like. It basically means that at that point, it's a bad risk reward to buy, but it's also a bad risk reward to come and counter trend because it's not extended enough. And then if the SPYs or NQs were more than $10 away from the 8 EMA, so again, the 8 EMA is at like 687, so you would need the SPYs to be at least 697, then you're extended enough where you should be more rapidly booking profit on longs and or looking for a counter trend short. Those are always the traditional numbers that I looked at. I don't think it's wide enough now because the SPYs are just so much more of an expensive ETF than it was in 2022, as an example. So you're probably negligible in terms of extension, less than like $7, $8 worth of extension, and like 8 to 15 is probably more like the no man's land, and then like 15 plus is probably now like more extreme extension. So again, as just a general rule, based on those three zones, when I'm looking at the market, that tells me what I want to do. Less than $8 of extension from the SPYs, I want to continue to be a buyer. Between 8 and 15, I don't want to be a buyer. I don't want to be a short seller. 15 plus, I definitely don't want to be a buyer, and I'm potentially interested in being a short seller. That's at the index level for the SPYs and for the Qs. you can't take those rules and apply them to individual stocks, because individual stocks, you've got consumer staples and defensive stocks and Procter and Gamble and Coca-Cola that if you had a certain degree of extension on those, honestly, that's like right now, honestly, in Coke, um, you know, Coke is $1 extended from the ADMA on the daily. That's like a lot for Coke. It's $1. That's a lot for Coke. But if you were looking at, Tesla or like a meme stock or a quantum computing stock or something like that, they can be massive. I mean, look at RGTI here at the top. This thing was trading at $58 with the ADMA at below 57. And that's a $50 stock, $10 of extension. We're just looking at Coke, which is a $70 stock with $1 of extension, saying that's a lot. And you had to get so much more for a quantum name to be extended. So I have these general rules in place at the index level. Those general rules do not apply to individual stock. Each stock is unique based on its beta and things like that. And also, if news comes out, if there's an earnings report, something like that, then stocks can become massively extended, typically way more than an index ever can. So you got to be a little bit more careful utilizing those rules at the index level, especially if there is a news event. But you can, do a historical analysis. You could look at Amazon, and when it was really extended back here on November 3rd, Amazon was trading at $259 with the ADMA at $234, and so you got like $25 of extension there. You could just do a historical look back over the course of the last handful of years, or even better would be to do it on a percentage basis and not an absolute dollar basis, and say, all right, how many times in the past has Amazon ever been able to get this extended? And does that count as extreme extension for Amazon? And if the answer is yes, it still might not mean that you should be shorting it, because what's the news event that's causing this move? Is it earnings? What is it? Because that matters as well. So counter trend trading can be very profitable, but is also, I think, harder money. I really think that easier money is trading with trend, and that's generally what I recommend to people, especially for newer traders. But you can be like a surgeon, and I know some people who make a hell of a living who are entirely counter trend traders, but you really have to have rules in place that enable you to do it, because if you're too early, you can get run over. And you're going to hear me say all the time when it comes to a counter trend trade that you are better off missing the move entirely than being too early on it. You're too early on a counter trend trade, and then you're spending the whole rest of the time playing defense, and you're not putting yourself in the position to really be able to make money. So I think that answers your question on extension. And then, when you have a nice uptrend and then you do get that pullback to the equilibrium zone, that's when you actually want to be looking for, in an uptrending situation, you get the pullback to the equilibrium zone. That's actually when you want to be looking for the pivot low for trend continuation, which that's, again, oftentimes the better trade. Would ALMS still go up? I have no idea what this is. I don't know what the news is. I don't know why it's up 100%. I don't know why it sold down from 22 to 16. Completely off my radar. I've got no feedback for you on this one at all. I'm sorry. Scrolling down here. Can you share your thoughts on Amazon for a continuation trade? I mean, it was great. So, we talked about with Amazon and Meta in particular, you had, like last week, almost every single one of these Mag 7 stocks was building out like a consolidation pattern, and then they all kind of broke to the downside except for Google on January 2nd. But then Amazon and Meta were able to very quickly, the next day, which was yesterday, recapture the breakdown level, which means that they became in play again for the upside breakout. So that upside breakout triggered for Amazon today. So Amazon and Meta, what did Meta do today? Meta did nothing today. but Meta was able to recapture the 655, which puts the breakout back in play. Whereas like Microsoft was not able to recapture its level, which is all the way up at 485, so it was not able to get the name back in play. Apple would need to recapture 270 to get the name back in play. But Amazon did it. They did it yesterday. It showed you its hand. It recaptured the level, so it put it in play for the continuation trade through 233 today. And it was a great trade if anybody caught it. Nike 1225. $12.25. Oh, on the upside. Yeah, there you go. That's a little bit of a better RDR. One big up day, two big up days. Day 3 here, you get the trade, goes above the previous day's high. It comes back through it. You short back through versus the high. Your target is this 8 to 21 EMA area. So, I prefer this trade on like a real capitulatory upside or downside setup. This actually applies. TT's example here, it applies. But the best situation to really be looking for that RDR type of trade is in that like parabolic move. And then, more recently, we've also been using that as an opportunity to trade small time frame charts, 5-minute charts, 15-minute charts with decent success as well. RGTI in December here. Yeah, I don't really call it for an RDR. I just kind of called it off this support area because I was looking for these names to bounce with the January effect, and of course they waited for January to do the January effect, and they didn't front run it in December like I usually think. So that was really more of it. I wouldn't really call that an RDR too much. ALMS is a buyout. Yeah, so you got to know the specifics of the news there to have an understanding of where it's getting bought out, what the news was. I shy away from biotechs. It's just not really my space. Over on the YouTube, from Scott, where did you enter the WDC short? What's your game plan for this? Price is like 219 in WDC. I started a little bit earlier than that, but I, traded it aggressively, and I had it up, and I, worked the trade and all that fun stuff that I like to do. My target in the thing right now is like it's only like 212 or something, and that target is going to be rapidly increasing as the stock moves. Yeah, my target as of right now is 212. But again, that's going to be increasing as it moves. So I'm not looking for much here. This is a huge day 1, but guess what? It's only a day 1. This thing could see 240 tomorrow if it wants to. So my position on this is very, very small. It's from a really good price, almost the closing price of the day. I'm not looking for much on the downside. I'll be out really quickly if this thing gaps down at all tomorrow. If it gaps up really big, I will probably add to that, and I can definitely do that because the position is so small. But then I'll be managing the position and working out of it. So that's the game plan with WDC. From Giancarlo, if the 15-minute ADMA was caught up on the 8 at 10:15, 10:30, would you have considered taking it a long instead of a short? Yes. Yeah, that's just so basically the question is, if you had this pattern, but the 15-minute was also caught up, would you consider taking it as a long? And the answer is definitely yes. And I would not have taken it as a short at all. Thoughts on the IWM today was a day 2. You might even be able to argue that, and a measured move on the second leg, you might even be able to argue that the IWM is a day 3 today. The IWM is getting closer to extreme extension than the other indexes are, especially if you want to consider that it started beneath and now is trading above. So yeah, it's a big day. I'm not ready to jump in on the other side of this IWM yet. I'm just too bulled up on this market right now. The flow of funds, the seasonality, the technicals all point to higher, and this is bullseye for the rotation trade of the January effect. So I'm not ready to jump in on the other side of this at this point, but if we were to get today repeated tomorrow, how big was today's candle? Like $5. So if tomorrow we close at like 262 and then we gap up the day after tomorrow, then I'll probably be shorting the heck out of this thing. That's the type of extension that I want in order to put that on the other direction. And again, it goes back to the same thing I say all the time. I'd rather miss the trade than be too early. So, if it starts to pull back earlier than that because it's been a big move or go sideways or whatever, then that short trade never would manifest itself. But I think that all three indexes at this point look great and look like higher. From Scott, I vaguely remember you speaking on this a while back, but in your opinion, pre-market is generally just noise and doesn't influence you one way or the other too much. It depends on what you're looking at, like what symbol you're looking at. Was there any trading? Was there any liquidity? A lot of stocks have zero trading and zero liquidity, or very, very, very little in the pre-market. In which case, what they do in the pre-market is entirely meaningless. When you think about like Apple or the indexes, there is more trading pre-market, but it is minuscule compared to what happens after the open. So in those situations, those pre-market levels can have some importance, but they're not nearly as important as the level that presents itself during the actual trading day. And it's again just because of the amount of volume that's actually occurring and going off. But like, if you have a news event, like we have an 8:30 economic number that rips the market in one direction or the other, that starting point of the news event is going to be really important for the whole rest of the trading session. So, pre-market levels matter to a degree. You just have to understand when they're important and when they're not. But I can tell you that I don't look at pre-market charts the second the market opens. When it's pre-market, I look at pre-market charts. But I will literally, like, as soon as the morning meeting is over, which is usually like 9:28 or 9:29, I'm switching my charts from showing pre-market to just showing intraday, because then I don't want to see the pre-market at that point. It makes the chart too messy. You expect an RDR and WDC in the coming days? Well, maybe. You would need a whole nother big day tomorrow in order to then have the beginnings of an RDR set up in WDC. Shorted the extreme extension and ALMS with size this morning, pre-market at 21.5 with target of 16. It was the best trade of the day by far. WDC ate my lunch, but I averaged up in the short. I'm proceeding the short with extreme caution. You got to be really cautious on that. It could, like I said before, this WDC could go to 240 tomorrow. ALMS just not on my radar at all. And if it's a biotech land, I don't have an interest in it. And buyouts, if it's a buyout, I usually don't play those either, because there's too many people with too much information that I don't have. Back in the VTF here from John, can you talk about how you provide liquidity to the market and get a bonus check for doing so? How would one of us do this management-wise? Buy 1,000 shares and place orders to sell every 100 or 10 cents up. So it's really simple. On equity, not on options, on equity, when you place a bid or an offer that gets filled, you get paid for the order. If you take liquidity, if you enter with an uptick or a downtick or a market buy or a market sell, then you have to pay the exchange for the pleasure of doing it. So if you are a trader who has good game plans, most of the time what you should be doing is providing liquidity. Because your game plan says that you're supposed to buy or sell at XYZ price, so you just have your limit order sitting at XYZ price. If it gets to that price, you get filled on it, and you get paid the rebate. So I think like 85% of my orders, probably more than that, for me are liquidity providing. The only time I take liquidity is usually on like a first entry. like a new trade is presenting itself, I need stock, I need it now, I want in, then I'll pay the spread and I'll take liquidity to have an entry. Or if a stop is triggering. If a stop is triggering, that turns into a market buy or a market sell, in which case I'm taking liquidity. So for me, because I think well in excess probably of 85% of my orders are providing liquidity at the end of every month. When you look at like your prop reports and you look at the ECN section of your prop reports, for most traders, no matter how often I talk about this, they have a negative number and they're paying the ECNs. For me, I have a positive number, or maybe I'm saying that backwards. You guys all have positive numbers because it's a payment of a fee. I have a negative number because it's paying me. But I'm, every single month I get paid by the exchanges for the liquidity that I provide. And again, just think about some of the names that I trade and kind of how I trade them. If you look at my SOXL chart today, pretty much every one of these orders is a liquidity providing order. On some of them, I took liquidity because the market was moving so fast that by the time I put the bid or the offer in, the market had already crossed through it, in which case I'm paying the ECN fee, but I'm getting price improved. So I don't mind paying the ECN fee when I'm getting price improved because it's still a win-win. But like every single execution here on SOXL was meant to be a limit order today, except for I think 2. From Eli, I feel like a lot of guys are looking for reversal on breakout moves before looking for a way to get in. Yeah, I don't know. But like I said earlier, the easier money is with trend. The easier money is with momentum, as long as you're not chasing price. So the vast majority of the time, the easiest money is made following what everybody else is doing, and it's only in periods of extreme that it makes sense to look the other way. There's definitely one person in here, I'm not going to call him out and say the trader's name, but there's definitely one person in here I know of who I have chided in the past because it's like the stock just broke out 5 minutes ago and is looking to put on the counter trend trade, and it's like, what are you doing? It literally just broke out 5 minutes ago. Why are you coming in on a counter trend trade and betting on a failed breakout? That's like not a good play. But I don't think it's a lot of people necessarily. But definitely, in the extreme situations, the counter trend movement can pay you. But most of the time, the easy money is going with it. All right, looks like I got through everything. It was a long afternoon meeting. Thanks for the questions, everybody. It was a good one. I will wrap it up there. Have a great evening. I'll see you all tomorrow.